us to our final session of the GGM Conference 2023, which is a workshop on India's gold jewellery exports, covering export promotion schemes, emerging markets, and the role of spot exchanges in gold supply to exporters. On the panel, I would like to invite Mr. Prem Nath, who is an independent consultant at FinMet, a veteran with 35 plus years experience in precious base metals, trading and hedging of price risk. We have Mr. K.K. Duggal, who is director at Gems and Jewellery Export Promotion Council, that is GJEPC, responsible for regulatory policy matters. Mr. Duggal has over 20 years of experience in gems and jewellery. Mr. Ashwani Kapoor, Chief General Manager. All right, so Mr. Ashwani Kapoor won't be joining. So we have Mr. Ashok Gautam, who is MD and CEO of India International Bullion Exchange at Gift City. And of course, Mr. Harish and Mr. Sudhish will be moderating. Thank you.
This workshop is on the potential of gold jewelry exports that India has, and we would like to understand what is the potential from Mr. Duggal from GJPC, and thereafter we will also request Mr. Prem Nath to discuss about the various export promotion schemes which are there, and then moving on to Mr. Ashok Gautam as to how can IIBX be integrated for the requirements of the export industry of India. So let me start with Mr. Duggal first.
Thank you, Mr. Harish, and thank you for giving me this opportunity to talk about one of the most fascinating sectors of manufactured goods export from India. As I think all of you would be knowing, gems and jewelry contribute to almost 11% of total merchandise exports from India and have been hovering around a figure of about $40 billion, the entire gem and jewelry sector I'm talking of. Of this, the precious metal sector, which is the gold or silver, they contribute to roughly $9 to $10 billion. And they provide employment to almost 5 million people, workers I mean, who are into the manufacturing of jewelry for export trade. So to that extent, it has a very important role in the economy of the country, providing employment and earning foreign exchange. India has been a traditional manufacturer of jewelry. It was known as Sone ki Chidiya if you study the old history books. So gold and silver and manufacturing of jewelry has been the traditional art of the Indian artisans, and they are very adept in that. Worldwide, India is a leading exporter. If we take the overall export world trade of jewelry, then 10% is the share of India, and this share could easily increase to many-fold. And I say that with conviction because of the demand and the capabilities of our skilled workers. Unfortunately, gold, which is a raw material for our sector, is a very sensitive item for India, and its availability for export has been a perennial problem, I would say. I have been involved in this sector for over 20 years, attended innumerable meetings, but the problem remains. Since gold is not available within the country and has to be imported, it has the off and on the CAD context. The importing agencies, the so-called nominated agencies, which are the banks or the agencies earmarked by the DGFT, they find it easy to import and give it to the domestic jewelers than to give to the exporters for the various compliances required to be filled by the So Harishi, the scope is tremendous, and we are at a stage where the world looks for the
But
Indian
in
jewelry.
my opinion, if you're importing gold for the purpose of export, there is no impact on CAD. Actually, there is a value addition. So to that extent, actually, you're helping the CAD.
Of course, you import the raw material and you add value in it and then export. So it is always a very healthy proposition as far as trade is concerned. But the availability, because gold, has a dual role. It is a currency for the Reserve Bank and for many, but for the jeweler, it is a raw material. And as a raw material, it has to be made available as easy as possible and at international prices, so that people can make jewelry and export and trade with it.
So when you say that there is a tremendous potential to grow the exports, so what are the various markets from where the growth can come in? Because I understand the demand is there, So either we have to replace some country to demand that. So whom are we targeting to replace? So you cannot increase the demand of the gold jewelry. So today, if we talk about how much is India's share in overall gold consumption of the world, and how much is the potential to increase that? I'm talking about the jewelry.
See, the jewelry, the total, as I said, the total trade of jewelry in the world is about $100 billion. At present, India's share is 10% and around 9.5 to $10 billion. So we have a 90 billion ladder to climb, which we can.
So talking about jewelry exports in that case, both to Prem and
Studied.
So with the SEPA coming in, what has been the quantum of increase that you have seen with the SEPA deal with UAE? And you think India should be looking at more such the agreements for boosting the exports? Is this the right way?
I think SEPA 20% growth has been there. As I have got some figures, around 20%. Is that right, Tukulji?
Yeah.
20% increase in the exports after SEPA, because the import duty in UAE is nil for exports of gold jewelry into Dubai, into UAE. So earlier it was 5%, so now it has been reduced to 0. So increase has been around 20% in this financial year in totality, and
But this is effective only for one HS code. In 7113 itself, the 7113, but only one HS code of 713910.
Yeah, 7113.
So not the all jewelry, is primarily the plain jewelry.
See, Dubai is the main market for plain jewelry. Our 60% of plain jewelry exports go to the UAE. UAE is a big trading center for the entire, Middle East, as well as the African countries and the CIS countries. People from the CIS or from Africa, where there are very strict regulations on import and heavy duties, they come, they buy jewelry, and they take with them to their countries. So the agreement, SEPA agreement with the UAE has been a boon for us. In fact, there is more scope, and we are looking for a little more when the review is done. At present, only the outright exports are allowed, whereas in our sector, especially the jewelry, a lot of export happens through the consignment mode, where the goods are sent and they are there for a certain time. The buyers or the customers, they pick, and whatever is sold, and the rest is coming back. The consignment exports are not covered under the SEPA norms, and they don't get the benefit of the duty exemption. So once that is included, the scope for growth will be further boosted.
And what is the work being done on that front?
We have already made representation to the government, and we are told that once the review is done, generally after the first completed year, so maybe next April or so, or this coming April, when it is done, perhaps then it will be considered that the consignment exports or the exhibition good export, which are there on, on pro forma invoice basis, they are also included into this benefit of SEPA, and that will be a big help.
So Premnath ji has worked in this sector extensively as far as supply to the exporters is concerned from the nominated agencies. So can you explain us, maybe if you want to do a presentation, please do that. And can you explain it extensively?
Can we put it on the screen?
Yes, you've shared it?
Yeah, I shared with.
Emil, can you please put his presentation? So as the session is a workshop, so I think Prem can provide an overview of how this whole process works.
Various export promotion schemes offered by the Government of India for supply of duty-free gold or duty redemption, duty exemption, duty remission for the export promotion of gems and jewelry. So some of the schemes which are offered by the Government of India as per the foreign trade policy is one through the nominated agencies. You know, there are certain schemes where you get duty-free gold first, and then you have to, of course, give some security bond to the to the nominated agencies or to the custom authorities if it is being imported directly, and that duty bond or duty security has to be given back or released once your export obligation is completed. So there are certain schemes where duty-free gold is given first. So such schemes are like, you know, supply by the nominated agencies. So nominated agencies supply to the exporters on outright basis gold, which is duty-free, or it could be on replenishment, it could be on the basis of the loan basis, where the price is not fixed and it is given for a period of, up to a maximum period of 270 days, including 90 days for the pre-shipment period and 180 days for the post-shipment period. And third scheme is the replenishment scheme, wherein the gold is exported first and duty-free gold is given by the nominated agency later on. So once gold is exported first, it means they are taking the gold duty paid from the market or from the bank, and then they are exporting, submitting the proof of export, and then the duty-free gold is released by the nominated agencies. There are some other schemes like, those there are some buyers who want to get their jewelry manufactured on job work basis in the DTA area, domestic tariff area. So there is a scheme of manufacturing of gold on job work basis and then supplying to the same buyer overseas. So overseas buyer is supplying gold to the job worker here, the jewelry exporter here, and it is released duty free here, and then the same gold is used and then it is sent back to the same buyer after manufacturing of the jewelry. So this is another scheme which is offered by the Government of India. Another scheme is which is known as the advance authorization. So which can be given for a period of 1 year. So if some exporter is having the orders of exports for up to 1 year, then he can apply to DGFT that these are the orders with whatever documentary proof is there with them as per the guidelines. So then the DGFT gives them advance authorization for import of duty-free gold from overseas and manufacturing of jewelry, and then it can be re-exported. It can be exported to the various jewelers overseas. So these are the some of the schemes which are there. Apart from that, there may be some small exporters, who sometimes they are not able to get duty-free gold from the nominated agency because it may be of small quantity, less than a kilo, or maybe they are not so conversant. So in such cases, also government has given them facility to manufacture jewelry and export for getting duty drawback. There is a duty drawback is given once the export obligation is completed. So there are, all these schemes are there. The only thing is that the small exporters, particularly we have seen, after closure of the MMTC, they were earlier giving it for 1 kilo, 2 kilo, etc. And at present they are struggling to get the supplies. So they are mostly going for the duty drawback scheme, and duty drawback is a very, it is not full amount. For example, duty is around, say, let's say 7 lakh per kilo, so they may be getting around 4.5 lakh rupees per kilo. So they are getting lesser amount, so they are losing on that account. So it is better. There, some other avenues are also given. Yes, this is the one. So this is the presentation. You can just have a look at which we have already discussed. That export promotion schemes include the outright basis, and then the replenishment basis, loan basis we have already discussed. Then procurement of duty-free gold against gold jewelry exported through overseas exhibition also. This we did not discuss. So this Gems and Jewelry Export Promotion Council, they give authorization to the exporters that these are the exhibitions which are being organized overseas. So jewelers can, get their jewelry, and they are allowed by GJPC to participate in those exhibitions. And when they participate in the exhibition, let's say they take 100 kgs worth of jewelry, and out of that, maybe if 70 or 80 kilo is sold, so and 20 kilo can be brought back, and then against that they can draw duty-free gold from the nominated agencies. So these are all facilities which are, extended by the Government of India. Then another thing which we have discussed is, duty drawback scheme and advance authorization scheme also we have already discussed. Other export promotion schemes include that SIPA with UAE, and it has, SIPA with UAE has, just now we discussed that 20% growth has been seen in the export of gems and jewelry, particularly the plain gold jewelry which normally goes into UAE. So this has also helped in export promotion. Exporter need to have a unique, and another thing, apart from these schemes, we need to have some niche, some speciality of, export of gold jewelry, which is, recognized, and like IT industry is well known in the world market. Similarly, here we need to have some speciality of our design, speciality of our kind of a jewelry, which is made in India. Concept should be there, and that should also promote the export of jewelry. And government has recently given zero custom duty on the import of seeds for the lab grown diamonds. So that should also help for domestic as well as for the export industry. Then there is another scheme which is in general for every exports, in fact, for all the exports, except a few exceptions are there, which is RODTEP, which is refund of duties and taxes on exported products, is a flagship export promotion scheme of the Commerce Ministry of Government of India, where they give some duty slips to some amount. What are the supplies of gold for exporters? Which is, one is the nominated agency, another could be maybe taking advance authorization and importing directly from the overseas suppliers, and third is the direct import of gold from overseas buyer for manufacturing of jewelry on job work basis, and again from the buyers, because this is buyer and here the manufacturer who is doing the job work, they have to tie up with each other. Then there is a duty drawback scheme which we have already discussed. Then there is a export from the SEZ and EOU units, who can already import duty-free gold directly, from the supplier. They don't need, nominated agency. Although they can buy from nominated agency also, there is no restriction, but they have access to import gold duty-free from overseas market directly. And then another thing which is coming out, which will be very helpful to the small exporter for which they are exporting, they are not able to do proper exports, and that is the IIBX, India International Bullion Exchange through Gift City, and this is in pipeline. I think Mr. Gautam will come for this. So there is a big potential for this, not only for small exporters, but for big exporters also. So apart from the existing sources which we have discussed, now going forward, I think Gift City, IIBX, and IFSCA people, they are already working on it, that the small exporters can also import gold through India International Bullion Exchange directly, whether it is 1 kilo or 2 kilo, which will be standard specifications are also there, and even 1 kilo quantity, 100 gram can also, 100 gram contract is also there, I believe. So all small exporters can also take duty-free gold. So proper SOP is required to be, prepared for this, and we are willing to help for that. And what are the regulatory compliances required for exporter? One is the registration of IEC code with the DGFT for all exporter, it is mandatory. One-time custom registration with the jurisdictional custom authorities is required, and then membership with the GJPC is required for getting those registrations. And pre-shipment period for export obligation, which is 90 days. So whatever duty-free gold is taken from whatever source, within a period of 90 days from the taking of duty-free gold, it has to be exported. And then post-shipment period means after exporting, we have to get the export realization within a maximum period of 180 days. So total period is 90 pre-shipment plus 180, so total is 270 days. Then we have to, exporter need to, comply with various compliances which are stipulated by the government, which is, first is the permissible wastage. They can't, use wastage more than the stipulated level as prescribed in the foreign trade policy. And second is the value addition norm. Whatever, if $100 worth of, gold has been taken from the duty free, from the nominated agency or from other sources, it has to, for a plain gold jewelry, they have to export worth of 3.5. 3.5% value addition minimum has to be there. Similarly, there are some other value additions for other diamond studded jewelry and pulse and other stones studded jewelry. There are different norms. Then, so all those norms have to be fulfilled. Submission of security to the extent of custom duty and interest thereon for procurement of duty-free gold has to be given either to the custom if it is being imported directly, or it is to be given to the nominated agency if it is purchased from them. And then those bonds or those FDRs or securities need to be released when the proof of export is submitted to the authorities, whether it is nominated agency or it is the customs directly, if it is imported directly. Application of IGCR. Now the new concept has been application of IGCR or for specific end use rules. So now this has been also become made mandatory for the export purpose also. Whatever gold is imported into India, IGCR rules are applicable because it is duty concessional. So wherever there is a duty concession, IGCR rules are applicable. So here, because their duty is zero, although it is for export purpose, so IGCR rule is applicable. So here, the exporter need to comply with the IGCR or specific end use rule 2022. And what are the implications for nominated agencies? Now, in this case, the nominated agencies have to first apply for in the stipulated form that they want to import gold for duty free for the exporters, and then some code is generated, and against that code, they will be permitted by the custom to import gold duty free. And after that, they supply gold to different exporters, and subsequently, because they have to give a duty bond, custom duty bond. Custom duty bond has to be given, which is online basis nowadays, and it has to be linked with the GST number also. And as of now, what we understand is GST number is different for different states, even for a same entity. So right now the problem is coming that they have to give different bonds for import of gold in different states. But the total in totality, the government wants that there should be only one bond for the entire country. So integration of all that thing is going on with the custom authorities, and hopefully it will be sorted out soon. And implication for exporters, here the exporters need to do everything digitized, because IGCR biggest benefit is everything is being technology driven, and it is based on digitization of all the documentation so that everything goes smooth. And in this case, a proof of export, for example, there are 3 documents required. One is the shipping copy, EP copy of shipping bill, custom attested invoice, and third is the EBRC. So all these things are already, generated automatically online basis through government authorities, sites. And if all these things are integrated with the, submission of the proof of export, then the duty release should be automatic. As of now, it is not integrated at the moment. So the problem is coming because there is a Form 3 in the IGCR rule which need to be submitted to the custom authorities, which will enable the release of the bond of the nominated agencies. So it is effectively not working at present, but custom people are, we have spoken to them, they are working on it to get it done.
Prem, let me ask you one thing. Like you talked about the automation of the submission of export proofs, so how does that work? Because when the nominated agency has issued the gold, it's in kgs.
Correct.
And when you're exporting, it could be in fractions. And there could be multiple export consignments out of that. So how do you handle, how does the system understand all of that? How do they aggregate that?
So in fact, the Form 3, they are devising all these features, because in IGCR, they have made a Form 3 standardized, which is not specific to the need of the nominated agencies. So all these forms are being reformulated for specific use of the nominated agencies, and there have been talks with the banks, nominated banks, and the customs. So they are already working on it to get it automated. There are some initial teething issues are there, but eventually I think it will fast track everything and it will automate everything, and there will be a lot of transparency, and there will be genuine exports, and there will not be any possibility of any fraud kind of a thing, hopefully.
Mr. Dugal, you may be aware, is there a partial bond release system? Because if you automate, And let's say if somebody has been issued 1 kg of gold and he exports 100 grams out of that in the first consignment, so is there a partial release of the bond happening to the extent of 100 grams? Because then you need not to really accumulate it to the 1 kg and then getting the bond released.
It's a very good question, Hariji. Already the Revenue Department has issued a notification which allows partial release of bond.
Yes, it is
Already it
there.
has been
It
issued.
is already there.
And under the IGCR rules, it is being made on a monthly basis. The exporter has to give his account to the nominate agency every month. The nominate agencies will further give it to the customs on the monthly basis, and all that gold which has been transferred from nominate agency to the exporter, if it has been exported during that month, then the bond amounting to that particular value will, and IGCR is that way a very good thing,
Yes.
will automatically get released.
Correct.
There is a provision for partial release and automatic release.
So going.
Although the system has yet to be developed for that, and I am told they are working, and perhaps by the end of March, this proper system would be in place and partial release would start.
Correct. So next is challenges faced by the nominated agencies. Now let's come to the challenges faced by nominated agencies, challenges faced by the exporters, and challenges of the government. So all these three things we will discuss. Challenges faced by the nominated agencies are bond cancellation. For example, when the duty free gold is imported on day one, and maybe it might take 1 month or 40 days for supplying to the duty free gold to the exporters, and after that they have to once the exporter takes, after that there is a 90 days period of pre-shipment for export obligation, 180 days for post-shipment for export realization, and then they have to submit the proof of export, and proof of export then the exporter once submit to the nominated agency will have to submit all that in form 3 under the IGCR rule, and till such time the form 3 becomes operational, which is suitable to the nominated agency specific need to the exporter for the gold, duty free gold supply by nominated agency and getting a bond release. So till such time, the duty is not released, duty bond can't be released by the nominated agency from the exporter point of view also. So custom will not release the bond of nominated agency, in turn nominated agency will not release the bond or the FDR or the security of the exporters. So it is a chain process. So this is a temporary phase, I think, and once it is done, everything is integrated, form 3 becomes suitable as per the need of the nominated agency and the exporters. Hopefully these challenges will be made simple and ease of doing business will be there.
So when you have discussed these challenges being faced by the nominated agencies, in the scenario where IIBX also becomes one of the source for supplying export gold, so who will be stepping into the shoes of nominated agencies, or like who will be responsible for the compliances?
See, under the IGCR rules, there was some confusion in the initial stages when a lot of all these compliances were left on the shoulders of the nominate agencies. The nominate agencies, they reverted by saying that they have no control on the exporter, from where he gets the goods made, who makes it, how he makes it, what he does. They are only as a canalizing agency giving the gold to the exporter. So the Revenue Department and we as a GJEPC, as a trade body, intervened, and we requested and we pleaded for them that these compliances should be left with the exporter. How he is getting the goods manufactured, from where he is getting the goods manufactured, and when he is exporting, he should be responsible for it. The Revenue Department has agreed for it, and soon, I think by the end of next week, we are expecting an advisory to be issued by the Revenue Department detailing all these responsibilities and compliances of exporters vis-a-vis the nominate agencies. That would help.
Yes, correct. So under these challenges, as we were discussing, Mr. Dugal has also mentioned. So all this challenge of getting all with the online submission of various form under IGCR rule, and before earlier the nominated agencies have been getting demand notice or show cause notice from or from DRI and from other agencies, CBI, etc. Although they have facilitated supply of export to the jewelers, and they have exported also everything submitted your proof of export bond is also cancelled. Still, after 4 or 5 years, they are getting some notice, one notice or the other. So that was creating a lot of problem. Whereas, they have facilitated, nominated agencies have facilitated their, to the exporters, but still they are getting. So this is a headache for them. So now with the IGCR, what we understand is that the owners will be there on the exporters, and the nominated agencies, of course, they are regulated by RBI, but there will be onus on the exporters also, and they will be equally held responsible if they are defaulting on any aspect.
And not only that, see, one very good thing about IGCR rules is that since it is digitalized,
Yes,
the record keeping will not get lost.
correct.
The problem with the earlier bonds was that many a times you would found BRC missing, shipping bill missing, either at the exporter end or at the nominated agency end. So the bonds were not getting cancelled. Now since everything will be done electronically,
Correct.
it would be not only faster, but at the same time it will be foolproof, I would say.
Safe record keeping will be also there.
Yes, so that will be foolproof. So
Correct.
that will be very good plus point of this.
Correct, correct. So challenges faced by exporters, as we have already discussed, that blockage of high amount of custom duty export performance margin, and there is a long duration of blockage of EPM, export performance margin, and associated cost for the same. But hopefully, once the IGCR Form 3 is, becomes operational as per the need, this long duration of blockage of funds will be, minimized. And non-offering of some export promotion scheme by nominated agencies. All the nominated agencies are giving mostly gold on export, for export purpose only on either on outright basis or on loan basis. Most of the nominated agencies which we have gathered, they are not offering the gold, duty-free gold under other schemes, like for replenishment basis or under exhibition basis. So that also needs to be, steer-headed, and they should also consider giving duty-free gold for the others, but particularly which are used by the small exporters. And another thing is duty drawback amount is very less compared to the actual duty paid by the exporter when they are buying duty paid gold from the market. So that also need to be rationalized, and it's
I
a
think
long
in the
time.
budget this year, they have addressed this issue to some extent, if I
Yeah.
remember it correctly. Like, I think the ADC has been reduced and the duty has been increased, so that the duty drawback can be increased to that extent.
Then there is a struggle of small exporters for supply of duty-free gold of 1 kilo or even lesser quantity. So hopefully IIBX will come and help these small exporters. And then challenges faced by the government is that non-compliance of export promotion policies by the exporter. Although most of the exporters fulfill and comply with the policies, but there are few numbers who spoil the name of this market. So some exporters take duty-free gold but don't export jewelry within stipulated period, or don't comply with wastage or value addition norm, or sometimes they export something else rather than and declaring something and exporting something else. So all those things also give bad name, and then government has to come out with some restrictions and other things. So that is all from my side. Thank you so much.
Thank you, Prem.
Ashokji, how do you envisage the role of IIBX with respect to catering to the exporters?
Yeah, thank you. In fact, this is something which we have been debating for some time, and this was always part of our agenda, that how can we ensure seamless delivery of gold to the exporters of jewelry. So essentially, one of the objectives of government as well as a country is that we increase our exports. For increasing the exports, obviously in the jewelry sector, you need that raw material. You need that raw material coming seamlessly, obviously with all the compliances in place and all the checks and balances. I have been part of a few meetings and discussions where I have heard the issues raised by the exporters of jewelry. GJPC has also invited me to various meetings and discussions in their head office, Delhi regional office, and I have been to other Surat, Jaipur, where I have interacted. Again, we are going to Ahmedabad to interact with GJPC members, plus other exporters. So I can summarize, how we can step in. So obviously, this is a work in progress, and we would also seek help of, IGPC as a think tank and GJPC as the association of the exporters, that they also have to, make that demand very clear, and the processes which we have understood, it may not be foolproof, it may not be complete, but I want the experts to tell us, what more is to be seen at, because when we read the papers or the documents, we believe it is doable. But when we talk to the people at the operating level, at the gift SEZ and all, then we come up where there's this issue, now this issue and that issue. We'll all have to work together. See, if I always believe that if we all sit together and try to find a solution collectively, we can always find a solution. Because ultimately this whole problem is, which we are trying to find a solution, is in the interest of the country. It is in the interest of the increasing the exports. Now, having said that as a preamble, now let me tell you what we believe are the solutions. I will right now not talk about the definition of qualified jewelers, because the moment we talk about qualified jewelers and the definition of qualified jewelers, we forget the real issue. Let's come to the real issue. First is, in the current situation, if any jeweler who, and whether it comes under the current definition or we create a new definition, who is an exporter in SEZ, in a SEZ which is not in gift SEZ, but obviously in gift SEZ there are no manufacturing units. There are other 11 or 12 SEZs, please correct me, sir, if I'm wrong. We were just looking at that data, where the gold, gold manufacturing, gold jewelry manufacturing units are there in that SEZ, and they export. So one proposition which we have given to the respective authorities, and we again give it to this august audience, and please I invite the feedback whether it is doable or not, and also from the experts here, that SEZ to SEZ transfer. In our understanding, the goods can move from one SEZ to another SEZ. So in this case, what we want to propose, or we are having discussion with the relevant authorities, that any entity which is in any SEZ engaged in the manufacturing activity of gold jewelry, that is a, and they do export because they're in SEZ, so they would definitely be exporting. So they can, at the click of a button, obviously they have to get onboarded and they have to meet this A, B and C. At the click of a button, they can take whatever gold. So we can give and price gold in the lot of 100 grams. We can also price and give gold in the lot of 1 kg. So different purities, 995 purity, 1 kg. Below that, 100 gram purity. Below that, 999 purity, I'm sorry. Below that, in 100 gram, 999 purity. So with that, we believe that they can take. But I have been told that SEZ to SEZ transfer requires this, that, and so many other things. There has to be a custodian at all the SEZ. There has to be a custodian in gift SEZ also. Please let me know, if these things are required and what all is to be done. Because that is again an issue at a gift SEZ. Right now, there is no custodian. But can the vault manager, who has been so designated by IFSCA, which is a regulator of that space, can that not be treated as a custodian? We believe it can be treated. If it requires any correction in the notification and rules, so be it. But we must find, see, we all talk about ease of business, and that's what we are trying to do. So once we get into that space, whoever is a vault manager can move to whichever is a custodian. I believe there are custodians in all of these SEZs. So it can move to that custodian and it can move, because those custodians and the vault, here vault manager has also given the bond. Yeah, please,
if
sir.
I interrupt you.
Yes, sure, sir.
This was the issue definitely. In fact, it was a very peculiar issue in Jaipur, where the SEZ is in two parts. Although it is under one authority, SEZ is controlled by one SEZ Development Commissioner, but the SEZ itself physically, there is a road dividing the SEZ. So there is one SEZ, and when the SEZ operations expanded, they created another bounded area which was across the road. So technically speaking, there are two different blocks. Now the regulations till then required that a nominated agency has to open an office in a SEZ to supply gold to the exporter in the SEZ. Now, when these are two SEZs but divided by a road, for any agency to maintain a separate office for just giving supply of gold to another unit in the across the road was not only economically viable and was also creating problems. So we took up the matter, and I am pleased to inform you that about almost 2 years, a circular has been issued by the DGP and the Commerce Ministry stating that goods from one SEZ can move to a unit in the other SEZ without having a representative office in that SEZ. You don't need to have an office there.
Which is fine. What they are saying, there has to be a custodian, because they say gold is a high value item.
For moving.
Yeah, for moving. Yeah, because our gold vaults are in gift SEZ,
You
which
can
is.
see that for that you can have a logistic agency which
No,
can give a bond.
I just made that point.
Yes.
That's what I
They can
said.
do.
That's what I said. We have the vault managers,
They can
okay,
do.
and they are the logistic partners also, and they've already given a vault, and vault managers are regulated by IFSCA. So the point is, GJPC will have to step in. I mean, that's where, I request you
Please
to.
write to us and we will definitely.
No, write
take it
is
up.
fine. I've already told you. Now the
but-
point is, we get into this writing mode to each other.
No, no.
Then,
What I mean to say is we need a
No,
proper
let me just tell
representation.
you. Your members have also highlighted this to me.
We could debate here.
Yeah, we are getting into this point. Let's have this.
I think-
why have a panel discussion?
I
If
think
you want
I
to
have
have a
promised,
discussion. Right. Okay. So the point is, your members have also highlighted this issue, and they have actually told us that I have to give them in writing, then only they will give the dollar. Okay. These your members. I mean, so the point is, this is what I have highlighted. I have no point in writing to you. I will write to you. As many times as anybody wants, I'll write to them. My job is, can we work on a system where in a seamless manner, if the gold is to be provided to the exporter in SEZ from gift SEZ, can we give it to them? This is one point. Second point is, for advance authorization. We have already, made a representation, and I believe that representation has gone to the DGFT, and they are working on it, that whoever is holder of advance authorization can take gold from a gift. Now, the whole piece was hinging on whether ice gate comes on the gift SEZ. Now that gift SEZ also gets ice gate, maybe hopefully by 28th of February, then certainly we will get into a situation where anybody who is in DTA area and is qualified to become the qualified jeweler and is also an exporter can give his own bond and the bank guarantee through ice gate to customs, meet all the requirements as you have mentioned, it is in the IGCR, and they can just click on the button, take the gold from us. So we are very much there to provide gold to the exporters of jewelry. Today we have vault in one center. We are, just to tell you and to this audience, we are working with the regulator to have vaults in other centers. Within next 3 to 4 months, we will have vaults at least in Kolkata and Chennai. And then we'll move to other SEZs. So, I mean, we want to cover entire India and we want to support the exporters' jewelry. My only point is, you know the problem, I know the problem, let's work together to find solution, right? And that is my suggestion to him.
Thanks.
Also, you may want to add that for exporters, it becomes one of the easiest platform to even source something less than 10 kgs also, buying it through an IBX.
Yeah, that's what I said, we can give as little as 100 gram also. So whoever is the smallest player, I don't think anybody needs less than 100 grams to export. I mean, I can provide a 100 gram bar also. Yeah.
It comes as a lower premium actually.
So any questions?
And the price will be transparent, the price will be democratic. You know what price they are giving to various entities. They will get a very good price. The point is, they will also have to, it's again, I talked about the point yesterday, there's a new highway and there's an old highway where everything is set. So right now everything is set, even though the road is bumpy and all, they are very happy on that bumpy road. Here it's a phenomenal road, but it's a new highway. They'll take their own
Nevertheless, I
time to
have a
come.
point here, Shukji.
Yeah.
A reason why I think it may not take off that easily or may not be that successful is because most of in the advance authorization, the transactions are more on a manufacturer in UAE, let's say, would intend to supply the gold directly to a wholesaler in UAE, intend to supply the gold directly to a manufacturer here. So and they intend to keep that bilateral relationship on instead of going through.
Sudesh, I have a point here. At some point of time, we have to move away from this bilateral relationship. Ultimately, the gold which is coming in India has to come through a trading platform.
So that,
Yeah.
which means that it eventually has to be made mandatory. Uh,
Which I don't know at this point of time whether it is happening or not. But certainly, my job is what I believe. Can I create a platform? Can I create products? Can we work with the authorities to create enablements? After that, the market has to,
Absolutely.
decide whether they want this platform or not. But we are very confident that this platform will certainly work wonders for the exporters of jewelry.
Of course, I think every exporter is looking forward to it because, as you said, you can supply even up to 100 grams.
So I think, do we have any questions from the audience? Yes, can we pass? Okay. Anandita, hi.
Yeah, yeah, thank you for two great panels. Very interesting discussion. My first question is to this panel, whether the historical experience of the 80-20 scheme that we had and why it failed and what was going on, would that be useful for this new policy? Some of it, that is one. And for the previous panel about the digital gold, I was thinking of the question of security of storing the gold, which is so important. And again, you have very different experience in different parts of India. Like the Malabar paper that we presented earlier, my student Muji presented. So every village, they will have a locker. And every house will have a locker. Very, very strong, and when there is a wedding party, one person will stay back. So there is a kind of culture of storing and keeping the gold safe in these regions. Whereas in Bengal, I heard that people do not invest in gold in the rural areas because of fear of dacoity and theft, and so there is a cultural difference. I was thinking that the success of digital gold so far would be more urban than rural. But digital penetration is so high in India. So I think there's a huge market and a kind of advertisement pitch for digital gold in rural India, if you can highlight the safety aspect. Yeah, these are the 2 points.
Prem, yeah.
For 2080, I can.
speak.
You can speak. Oh, sorry.
I can speak about 80-20. See, for exports, as I said earlier, getting raw material is always been a problem. To that extent, the 80-20 scheme was excellent, I would say, because that mandated that for any agency to import gold, they will have to give 20% of it for export. For exporters, so it was a very good opportunity. There were agencies running after the exporters to take gold. But it got badly implemented. Badly implemented in the way that when the condition of 20% supply to exporter was being mandated and being followed or strictly being followed, many of the agencies, they connived with the fly-by-night exporters who exported to Dubai, melted the gold, made the payment here, got 80% gold and pushed it into the domestic market. So it lost the purpose for which it was made. The 80-20 scheme was made because at that time in 2012, there was a big CAD problem. And there was a meeting in Finance Ministry, which I also happened to attend. We said they wanted to actually ban the import of gold. They wanted to stop the import of gold. I said, you can't, you have to give to the exporters. So they said, then how much quantity is minimum that can be imported? So they arrived at a figure of about 400 to 500 tons because export was roughly 80 to 100 tons. So they said, okay, 80 tons for export and 4 times of that for domestic trade, 400 tons is fine, only that would come. But then some agencies, they manipulated, they used their clever mind, they got hold of some exporters, रातों रात चूड़ियाँ बनाई, उधर भेजी, melt किया, payment आया, and got the remaining 80% which they pushed in the domestic market. So the purpose of 80-20 was defeated to that extent.
Yeah. You see, and under the 80-20 scheme, rather than controlling CID gold import, went up sharply.
In fact, in
In fact,
May
it was the other way
2014,
around.
we had seen that was the month, I think, there's the highest ever in a month.
Yes.
Import.
And another thing, the premium in the market, shot up like anything. Premium which used to be about $2-3, it went up to $70-80.
And not only that,
160. See, so
180.
that was a very big mistake of the government. I think they should not have implemented, but
badly implemented.
yeah, very badly implemented. Although intention could be right, but implementation was very bad.
Yeah,
So
talking
can I
about
take-
digital gold, yes, the point is well taken about on that front. I think yeah.
Can I just make
Yeah,
one
sure.
point regarding, so ma'am, what you're saying is absolutely, it's phenomenal. And we always believe that in the rural area, probably this digital gold may not pick up, but I don't believe it. Initially, all that phone and now the smartphone. So smartphone penetration in rural India is also phenomenal. They all know how to operate. They know how to operate on all the apps. So, the more we make easier for them in their vernacular language to, trade on the safe gold. But the point you talked about the vaulting and all, so that's where that whole EGR piece is coming. That we'll have to dovetail this whole EGR into the digital gold. EGR itself is a digital gold.
No,
And,
and there's more
in a different sense, not in a
trend.
different sense,
Okay.
because you are talking about folio and then you are talking about the people who don't have a folio. We'll have to all figure it out. Can they create an infrastructure of digital gold which is backed by EGR so that there is what you talked about, the purity, security of the gold. So that can be ensured because the vaults are managed by SEBI. So this is where that whole piece can work. This is my view. I'm not an expert in this.
So-
But what the point you made is phenomenal, and that's I believe is the way forward.
I wish even the previous panel could have taken that. They would have, they had more people to answer even on this as well. But anyway, so I think with this,
One more, about the 80-20, fallout, which we all, sorry, the fallout of 80-20 scheme, which we all, face now, the duty on gold import before 80-20 was 2%. And because of this unscrupulous trade during the 80-20 scheme, the import duty went from 2 to 4 to 6 to 8 to 10 to 12 in a period of less than 1 year. Within 1 year, the 2% became 12%. Because they could not check. They mandated that if you export 20, you will be allowed to get 80 for domestic trade. So people exported and got 80 and sold in the domestic market. The government jacked up the duties, 2 to 4 to 6 to 8 to 10 to 12 in about 1 year.
And at that time, the only nominated agencies were allowed to import gold. There was no premier trading houses were not allowed. PTH. They were also allowed. No, earlier.
no,
they
I
were
think
not
these
allowed,
technical things,
but
we
they-
don't have
they
the
also
audience
will-
actually to really appreciate this, because this is actually too technical. And
It's done and dusted. Over a cup of tea, they can discuss.
Yes, of course. So I think
very
we,
interesting stories there.
of course, we will have time for, we will definitely head towards having tea together and we'll discuss that in detail. But I think the time to wind up now. And thank you very much, Prem, for making a beautiful presentation and a very exhaustive one, giving an overview of how the export schemes work. And I think Mr. Gautam definitely can take some, clues from that. And of course, it will be shared with him as well. Thank you, Mr. Dugal, for sharing your thoughts on what GJPC is doing to promote the export sector further. With these words, we conclude this. Thank you very much.